Hi, this is David with the Enzo Trading System, and today I would like to address a common concern, and that's regarding the ability or lack thereof of the art trading model to potentially not take some profit that seems to be obvious. And and then the next step would be, should I, intervene with what the algorithm do? Should I take that profit uh, when I know I'm able to take it? Of course, the answer is no. As far as I'm concerned, this is the best that we have, and this is better than. It's not that the algorithms lack the better judgment of a human. It's the human that is unable to think logically, to think statistically, and that's a weakness that we all have, and that's why most traders lose money, and it's very hard to make money, and it's not obvious at all. So about the concern, what I'm talking about is that when a position is open, in this case it was like the other day on Ethereum, position was open rather quickly, like a couple of hours, the price was already up by 7%. If you're like leverage 3x, that's 20%. Maybe, I don't know, you see $500 on unrealized profit, and you think you're gonna net that profit. Then the time goes by and then goes back down, and then you don't get any profit because the algorithm closes. In this case, even many times will close it actually at a loss. So the obvious conclusion would be, why next time that I see that I'm in profit, that I could pocket, $500 or whatever for the day, why shouldn't I do that? And the response is that you may lose the chance for a much bigger profit. And it's not enough to settle for a smaller profit. You really have to let the system be as greedy as the system is designed to be, because if you're not greedy enough, if you're not patient enough, you will end up missing those the real profit. So as the way our system is designed, and I guess honestly I think probably most systems that are at least trend trading, is that you maybe 80% of the time you just stick around to try and wait for the big opportunity, and you open a position and then you close if you really see that it's going nowhere. And then there's the 20%, maybe 10% of the time where things really go well, you get into a position will give you 10%, 20%, and multiply that by leverage. That's what really makes at the end of the year, what makes a big difference, what actually could make the difference between ending up in profit or a loss for the total balance. Because what really matters is the balance at the end of the year. Who cares if you make $500 today, if you 3 months down the line you're $1,000 down? So that's not the way to go. And yeah, so the decision of the algorithm is mostly based on our trend indicator. If it's green, it means that it's more probable that the price will continue to go up. If it's red, it means that it's more probable it will continue to go down. So it's very simple. I mean, how you get to this is not simple, but once you have it, it's simple, and you really want to follow it. And it pays off to be lazy. It pays off to ignore those things because you really want to go for the big wins. So it's not like we completely follow the trend indicator all of the times. We also do sell at significant levels in some cases. I don't know if I have an example here. Yeah, well, we have a good example here. Let's see if I enable the levels. Those are magenta lines. They indicate levels, and cyan vertical line means that there was a sell happen at the level. In this case, went really well. 10% sell, buy again slightly lower, buy again, and then sell pretty much at the top. There was a rejection, then it followed by a loss, but this was good. But then, but we do use this sparsely, and there are drawbacks. I think I can make an example with we don't trade Dogecoin, but it was like on the simulation there was a recent example that shows this case really well. So there's a position here we made 95%, but our trend now it's a bit messy, and it closed at the level. So let's see if we can simplify this. So our trend indicator, would have opened pretty much around here. It would have closed here, meaning at this point. So it would have made perhaps, if this is 100%, this, I don't know, let's say 150 to 100%. So let's say you miss an additional, 50%. That's a big loss. I mean, you didn't lose money, but if you don't make as much money as possible, you're gonna lose it down the line. So it all sums, you have to make the sum of all your wins and losses. So you always have to be as good as possible. In this case, the sell at the level failed, but at least, selling at the level is a lot more, and there is a rejection where you consider the volume and all that. There's some logic behind this. It's not simply I'm happy with 100%. You should never be happy. If the price is going to go up, you just have to stick into it. Don't get into the mindset of, oh, this is too high, this is too low. There's no such thing. So, and then to add insult to injury, in this case, it sells. Then what happens? Now you're pretty high in the market. Everybody's excited. There's a little bit of retracement. There's a lot of volatility, so you have to buy again at some point. Eventually, you don't know what's going to happen. You sold, the trend tells you that you still have to go up, so you buy again, but now you end up in a stop loss because the market is very volatile, and this will happen quite often. And then you wait some more to buy, because even though this is in the green, there is some other logic involved with with deciding when to buy, and then you end up buying a stupid place and you get into another stop loss. So instead of doing additional 50, 100% profit, you actually end up with a couple of small loss, but yeah, it's definitely much less than what you could have done. Why does this happen? This is because we impose a risk level on every trade, which must be done. I can show, I think, Cardano, there's some obvious case. You can see here earlier today, we were in the green as far as a trending indicator went. It bought, and then there was a lot of volatility, and the stop loss hit the mark and sold. And so that was a loss. In this case, we finally got lucky. This is our stop loss. It bought, it didn't hit the stop loss. In fact, it went up. It went up, and now we're at this level. And now we're really in a nice and comfortable position, because there's a lot of volatility here. Because we're all the way into the position, we don't really care. I mean, our risk, our chance of loss is much more reduced, because it will take a lot of trouble for the price before it even gets close to the stop loss, and we can afford all the volatility. It doesn't matter if it goes really up, there's some whale comes in and it dumps it down, maybe it dumps it down all the way down here, who cares? We'll go back up. But if instead we decided perhaps that this was a lot of profit, let's say you pick like a nice stop, you think, and then you're still in, then at some point you buy again, and then let's say you buy here, and now there's a much higher chance that you will end up into a stop loss, and then it breaks your ability to continue to ride. So continuation on a trade, yeah, it doesn't work because of that, because you have to reset your risk level, and then you don't have that much room to play anymore. Why do you have to set your risk level? I mean, you could make it wider risk level, then you have to make a smaller position size. So if it really goes up, you're gonna earn less. Yeah, I mean, for every idea of that kind, there is a reply, and it's not a positive one. It's just as a general rule, all this stuff. It's not just that I thought about this. It's obvious stuff that everybody thinks about. You thought about it. A million other people think about it. There's no obvious way to take a smaller profit. Yeah, you can think you can settle for a smaller profit, but then at the end of the year you end up in a loss, or instead of making 200%, you make 20%. You know, this is all been tested, statistically proven, and all that. It can definitely be improved, but it's not obvious. And yeah, I don't know what else to say about this. Probably I could add more, but if you don't believe what I'm saying, spend a few months trading by hand, and then see if you get lucky. If you don't, how you end up doing. Chances are not in a good place. So then you'll learn that it does pay off to stay into the trend. Although in general, I don't think it pays off to trend manually, but that's a whole different argument. So I hope this was helpful. If not, I guess I'll gather some feedback. If there's more questions, I'll probably do another video, because I'm not gonna reply about this individually anymore. It's frustrating for me as well. So see you. Thank you.